a stellar set being reported by Tata Motors, definitely surpassing the street estimates. Firstly, when we look at the profit, we were expecting a number close to 2,412 crores, but the company has delivered 3,089 crores in the bottom line. If we look at the margin as well, versus an estimate of 12.2%, 13.3% is what the company has reported as consolidated margins, and a similar performance in revenue as well as the EBITDA. A slight outperformance versus the street estimates is what we have seen. But when it comes to the management commentary and specifically looking at the internals, then they look strong, especially on the JLR front, because this time around the JLR EBIT margin for the quarter was expected to be 5.5% this time. A sequential dip from 6.5% in Q4 we were expecting, but 8.6% is what the company has reported in the JLR EBIT margin. Let's talk about the outlook going ahead. So for the commercial vehicle segment, they do mention that the demand was impacted on the back of BS6 transition, but they expect demand to sequentially improve in financial year 24. Other than that, for the passenger vehicle segment, they expect the demand to be steady. Some of the upcoming launches are also planned up just ahead of the festive season. But when it comes to their JLR, they do mention that Q2 production and the cash flow is expected to be lower than Q1. The annual summer plant shut down on the back of that. So that could be something that may not be taken very positively, because they are already guiding that Q2 production could be lower, when JLR is already sitting at a strong order book. So that's the commentary coming in from Tata Motors. But overall for Q1, we are seeing that the numbers were ahead of the street estimates. So definitely a thumbs up.
The challenge with the DVR shares has been that of the various, we are amongst the few companies, large companies will probably be the only one having the DVR shares there. This instrument had lost its charm somewhere in 2010 when the regulator had concerns on the use of the instrument, and thereafter it's been restricted only to startups. So while we have tried every trick in the book to infuse liquidity into it in terms of a QIP, a rights issue, putting it in the F&O segment, even then this discount that is there started averaging at about 48% on if you took at from the beginning to now, the average is about 48% discount is what this is trading at. There is almost a understatement of Tata Motors' overall market cap because of this discount which is there, which despite everybody's best effort is not going away. And therefore we have said, and it didn't matter when we declared a dividend, even then the discounts continued. So therefore that's basically because there is clearly a reluctance to come into this instrument, and therefore the discounts continued as they did. And the solution that we have tried to put together now, I think cracks this problem fundamentally,